Welcome back to Market on Close. Let's check out the options, flows, and some technicals with Mr. Kevin Green. We got a shortened week, KG, but it seems like we could swing a little bit. Some action in here today.
Yeah, we got a little bit of intraday action, especially when you saw that flush to the downside this morning here, Oliver, getting really close to that 5,900 level. But we did have some buyers really step in aggressively, and that's where we started seeing the tables turn when it came to market breadth. Earlier this morning, we only had around 20 to 21% of stocks that were actually in the green. That's actually improving right now to around 42% of the S&P 500 stocks in the green. And I think going into the close, what has been difficult for us is actually maintaining the gains and not really seeing any type of aggressive sell-offs going into the close. And I think that's going to be something to be mindful of here today, but we still have a lot of call side buying here. You could see 59.70 to 59.75 being an area where the market does try to test before the close. And if not, and we have a little bit of a failure, you could look back at that 59.35 level as an area of potential support. And that's going to once again coincide with that 50-period moving average that we've been keeping track of. But overall, actually, today has been a pretty decent day. And if we go to the daily chart, the candle here today is also going to be really good. It would be a hammer candle, pretty much still at the bottom end of the trend. And that's what you really want to see. You want to, it's not a recommendation, but usually technicians like to buy hammer candles, right? And because that does show that there was a flush in the market, and then there was the ability to kind of bring it right back up. And that's kind of what we are forming today. So you'd like to kind of just close at these levels, maybe close a little bit higher. And if you have that technical candle setup kind of taking place, you're going to be above that 50-day moving average, getting really close to that 50% retracement. That does set you up for a pretty decent week here. Now, obviously, we have a half day tomorrow, probably light volume. Prices still can move, but we could see some follow through on Thursday and Friday. That's really where you want to kind of recapture some of the previous highs here.
Okay. Volume-wise, how sleepy is it out there?
On the option side, it's actually looking pretty good. I mean, in the top two traded options for the S&P 500 are clipping at around 70,000 contracts right now. So I would not be surprised if we get close to 95 to maybe even 100,000 by the time we get through the close here. And I would say the volume across the board when you're looking at equities has been, for the most part, actually pretty decent. Actually, it's surprised me a little bit more than what I would have expected here today. I think the biggest concern is going to be liquidity in the market. And that's where you can have those, aggressive flushes like we saw on an intraday basis in that rally back. If there's just not a lot of people doing a lot of trades, it doesn't take much to really move price. And I think that's the environment that we should expect here over the next couple of trading sessions. Going back to that daily chart, though, I kind of talked about the RSI for this morning. What you want to see is kind of that RSI kind of hinging a little bit, which it has, is trying to rebound here, and then see a complete follow through and having that coincide with the advancing stocks, or that advanced decline line turning to the green. So this is a good day. I mean, we got to close here. You don't want to really see a fade. You don't want to fade below the 50-day. I think that would be my line in the sand for today.
Okay. All right. I like that. Always like to see some lines in sand to know what's interesting. As far as big flows, it seemed like you kind of answered that with the volume. So I guess we just see if the support holds. It seems like it's mostly a conversation of us holding our footing and not breaking down.
Yeah, exactly. Especially going into the close. When you have weak closes, that's where you can kind of question the price action or question the stability of prices. And that's really what the concern is going to be. We did have a nice little channel to the upside. We did see a little bit of a fracturing. We're coming back and kind of retesting that 59.60. And you want to be able to maintain at this level. And if not, and we do see a little bit of a failure, that's where the fear of another 10 or 15 point drop going into the close, which is pretty much what we've seen almost every trading session for the last week and a half or so, comes into the picture. And if that's going to be the case, once again, 59.35. I would like to see breadth kind of expand out a little bit more, but let me tell you, it's a lot better right now than what it was this morning. So I think that's a win if you can have one. And the mega cap names, for the most part, are still holding up here. So that's kind of what we have for this week. I would suspect that tomorrow's going to be very light when it comes to the options volume. Probably not a lot of flows one way or another. And I think the equity traders are probably just going to command the space for at least for tomorrow and maybe on Thursday.
All right. Seems like not the worst start. We'll take anything. And technically, since we bounced on Friday, it's a little bit of a follow through for S&Ps if we can hold up. So we got 23 minutes, 47 seconds. Thanks, KG. Appreciate it, sir. We got to jump.